Hello, my name is Evan, and welcome to Economics 101, your number one source for everything economics. What if the world stopped using the US dollar? Not overnight, not in one dramatic moment, but over the course of time, slowly, country by country, trade deal by trade deal, until America's most powerful economic advantage started fading away. That's the fear behind something called de-dollarization. And lately, headlines everywhere are claiming China is challenging the dollar. The BRICS nations are building alternatives, and America could lose its financial dominance. But how much of this is actually real, or how much is hype? And what would actually happen if the dollar became weaker globally? Today, we're going to break down 3 specific points related to de-dollarization. Okay? To start off with, what is de-dollarization? De-dollarization, and what does it actually mean? Why countries are pushing away from the dollar, and whether the US dollar is truly at risk. Before we jump into the video, I have a quick favor that really helps grow the channel. If you enjoy economics explained in simple, real world way, make sure to hit the like button and subscribe. It helps more people find Economics 101 and support the channel more than you probably realize. So I'd appreciate it. All right, let's dive in. All right. First, let's simplify the entire topic, okay? De-dollarization. De-dollarization simply means countries reducing their dependence on the US dollar for trade, banking, and reserves. Right now, the dollar dominates the global financial system. We all know that, okay? Most international trade is priced in dollars. Oil is mostly traded in dollars, petrodollar. Global reserves are heavily held in dollars, and many countries borrow money in dollars. Everything operates for the most part, or has been operating for the most part, in dollars. Even if 2 countries have nothing to do with America, they often still use the dollar. That's how powerful the US financial system became after World War II. But some countries are now trying to change that a little bit, okay? Now, why is that? Why would a country want to change or get off the dollar, US dollar? Well, because relying on the dollar gives the United States enormous influence over the global economy. America can impose sanctions, restrict access to the banking system, influence global capital flows, and indirectly affect other economies through Federal Reserve policy. For countries like China, Russia, that dependency is becoming uncomfortable. Okay, so they've started exploring alternatives. All right, so this is where kind of we enter the BRICS kind of enter the conversation. You may have heard of the BRICS. I'm gonna run down briefly what the BRICS, or the countries that are in the BRICS, and what they actually stand for. Okay, all right. So BRICS, BRICS, it stands for Brazil, Russia, India, China, South Africa. All right? And the group has expanded influence significantly in recent years. These countries have discussed trading in local currencies, creating alternative payment system, reducing reliance on SWIFT, and increasing gold reserves. So here's the important part of this. This does not mean the dollar is disappearing or disappears tomorrow. All right? That's one of the biggest misconceptions online, is that the dollar is going to go away. That's not the truth. Instead, countries are slowly diversifying. So let's just give you an example. So China and Russia increased energy trade using the yuan and rubles. Some oil production countries have explored non-dollar settlements. Central banks globally have also been buying more gold in recent years. And you're going to say, why gold? Because gold isn't controlled by one government. All right, if you can kind of understand that. And during periods of geopolitical tension, countries often want assets outside the U.S.-dominated financial system. This movement accelerated after Western sanctions on Russia. That event showed many countries something really important. If your economy relies heavily on the dollar system, the United States has leverage over you, okay? And many governments don't like that reality. They don't like Big Brother actually having dominance over them, okay? Now, despite all the headlines, the dollar remains incredibly dominant. If you look at it overall picture, has it been losing some of its dominance? Yes, but for the most part, it's still dominant. And this is the part many people ignore. The U.S. dollar still accounts for a massive share of global trade, of foreign exchange reserves, international debt, central bank holdings. And that's because the dollar has an advantage other currencies simply don't have. They can't match it. First of all, the U.S. Treasury market is enormous and highly liquid. All right, investors trust they can buy and sell U.S. government debt easily. All right. Second thing, America still has one of the largest and one of the world's strongest legal and financial systems. All right. And the third thing, the dollar benefits from something called network effects. And this is huge. It's everyone uses the dollar because everyone everyone uses the dollar because everyone else uses the dollar. That's pretty much it. It becomes self-reinforcing. If global companies invoice in dollars, banks hold dollars, and commodities trade in dollars, switching becomes too difficult. Like, I can't get off a dollar system it's how I've been operating for years. Every country, even countries that dislike U.S. influence, still often rely on dollar stability. So while de-dollarization is real, replacing the dollar completely is an entirely different challenge. Okay. So what happens if demand for dollars falls? Okay. Let's talk about the consequences, the real economic consequences. Okay. Why does this matter to you and me, regular Americans? Because global demand for dollars helps America finance its economy more cheaply. Here's what I mean by that. Kind of stay with me, okay? Countries around the world buy U.S. Treasury bonds, okay? That creates strong demand for American debt. And stronger demand helps keep borrowing costs lower than they otherwise would be. If global demand for dollars and treasuries weakens significantly over time, that's going to mean interest rates could rise. Government borrowing becomes more expensive. Mortgage rates may stay higher. And inflation pressure could increase. Okay? That's because America benefits enormously from issuing world reserve currency. So economists even call it a exorbitant privilege. Okay? The U.S. Is looked at as a privilege by most economists that the U.S. can borrow at a scale because the world trusts the dollar system. Now, again, we are not seeing an immediate collapse in the dollar, U.S. dollar, but even gradual diversification could slowly change financial dynamics over decades. We're talking about right now 2026, but if you kind of see that de-dollarization continue over years, it could change the financial dynamics of our financial system. This is where things become deeply connected to the Federal Reserve. When the Fed raises interest rates, the dollar often strengthens, okay? Why is that? Because higher U.S. rates attract global investors seeking better returns, all right? That's exactly what happened during the recent inflation battles. As the Fed aggressively raised rates, the dollar surged. You had emerging markets struggle, and global debt costs increased. Okay? And that created tension internationally. Many countries felt vulnerable to the U.S. monetary policy decisions. This is another reason why some governments, they want alternatives. Nobody wants to depend or be reliant on the U.S. that much. They don't want their economies overly dependent, okay? Here's a little bit of irony on all of this. Um, during global crisis, investors still usually rush into dollars, not away from them. Okay, even though you might have a global crisis, people are still want to rush towards our dollars. And that's because despite all the criticism, the dollar is still viewed as one of the safest financial assets in the world. Even though people talk bad about it, their money is still going to flow into dollars. Okay, the trust matters. When we talk about globalization, trust matters enormously, and trust is very hard to replace. Quick pause, y'all. If you want more breakdowns like this that explain global economics in a way that actually makes sense, make sure you subscribe and turn your notifications on. A lot of people hear financial buzzwords like de-dollarization without understanding what they actually mean. And that's exactly why this channel exists. I want you to be able to kind of understand some of the terms and some of the things that are being said so you can just prepare better for the future. All right, let's hop back into it. So the question about the dollar collapsing. Could the US dollar lose reserve currency status? You'll hear that term a lot. Could the US dollar lose reserve currency status? And the answer, technically, yeah, it could. Any reserve currency can eventually decline. History shows that the British pound once dominated global trade. Empires rise and they fall all the time. That's just history. Financial systems evolve over time, but reserve currency transitions usually take decades, not months. So nothing is going to happen in the short term. And right now, there's no single currency fully positioned to replace the dollar globally. Okay, there has to be another currency to take over the currency position, and there's no currency that can do that right now. The Chinese yen, I would probably say, the yuan still faces capital controls, transparency concerns, government intervention issues. The euro has structural political challenges, and cryptocurrencies, they remain far too volatile for global reserves use at scale, when you talk about at scale. So the biggest realistic scenario isn't sudden collapse. It's gradual, it's basically just a gradual decline. A world where the dollar remains dominant, but alternative systems slowly grow alongside it, that's more likely. All right, that's much more of a realistic approach, or a realistic economic outlook for the dollar. All right. To wrap things up on de-dollarization, what does this mean for me and you? What should regular people actually take away from all of this? First, don't panic over headlines. The dollar remains powerful for now. Understand global economics affects everyday life more than people realize. And the dollar impacts inflation, it impacts gas prices, it impacts your mortgages, it impacts your investments, it impacts government spending, it impacts stock markets, it impacts geopolitics, okay? So you need to watch for long-term trends, not what's happening in the short term, okay? The real story isn't the dollar dying or the dollar being de-dollarized tomorrow. The real story is how global power slowly evolves over time, okay? And whether America can maintain the economic trust that made the dollar the dominant, be in that dominant position in the first place, okay? Trust is the foundation of every financial system. That's what we have to remember and take away from this video in particular. So is de-dollarization happening? Yes, it is, but to a degree. Countries are clearly exploring alternatives and trying to reduce dependency on the U.S. financial system. They are doing that. But does that mean the dollar is about to collapse? That does not mean the dollar is about to collapse, okay? The dollar still dominates global finance today, and it will tomorrow, but the conversations around de-dollarization are growing, and they're growing fast. And understanding it matters because it affects, I'm gonna say it again, It affects interest rates, it affects inflation, it affects global markets, and more importantly, overall, it affects America's economic power. Now I want to hear from you. Do you think the US dollar will still be dominant 20 years from now? Okay, where do you think we will be as far as de-dollarization in 20 years? Drop your thoughts in the comments below. And if you enjoyed this video, make sure that you like, subscribe, and share with someone trying to better understand the global economy. Again, this is Economics 101, your #1 source for everything economics. I'll see you on the next video. Thank you.